This is a live recording of Judd's Room with Ira Harris and Pax from Pax Group Trading. Ira, welcome. Pax.
Hey, Judd.
Thank you.
So anyway, Ira, like I was saying, we ended up catching the short off the opening range this morning out of the S&P, and then I've been short crude from the opening range. Took those into the oil inventory number, and I got out of my. This is actually, I think I made a mistake. I pitched my longs. I pitched my gold longs yesterday, but I think maybe I should have put them on against. I should have put some euros on. I should have sold some euro, maybe some Aussie against it, and kept that spread.
Yeah, the Swiss really gave a good. I actually sold some Swiss after I bought back the gold. It's really kind of just bounced around, but it really has been a good play. Now it'll be interesting. Again, we died up at that in the gold at that 1350 area on the lead contract of the futures. That's what I'm looking at. So we did die up there. So we definitely know that there's significant overhead resistance. We knew that before because this has been the area. So I want to see where it closes, you know, how well it closes. And again, you know, and I know I must be wrong. The Nigerians were talking about silver, but they were seeing some action as usual. Is what all they report on is the in the $12 PAS options. So somebody's looking for a move into silver. I actually am looking for a move into silver too. It's been very frustrating because silver is still tied to the copper. And that's the way the algos are looking at it. They treat silver, which used to have a much more precious metal. It's probably now, right now, it'll change, but right now it's probably because of the algos deeming how the relationship to copper, it carries a more weighting for an industrial metal actually than a precious metal. But what'll make a change, I don't know. But again, you know, I don't think you really get a true real strong metals rally until silver starts to gain. And yet on the gold silver ratio, which, you know, I've watched for as long as I've traded, which is 42 years, and it's an important ratio, but we're at really unbelievable highs here. It's a 90 to 1 or so, which is historically very, very high for gold to silver.
We're back to 1993 levels.
Yeah, it's 25 years. We talked about that earlier. Yes, 26 years. And that was for just a quick moment there, as it usually is. And then back in 2016, I'm not looking at the chart, but I do know it because I've been all over this for the last day and a half. It got up over 80 for a brief while. And then I always remember that when it got under the 200-day, which at that time in 2016 came in around 72.5, I was busy trading it, but somebody very close to me put it on. He said, "Oh yeah, I think it's time." And he sat with it all the way for the whole move. I didn't make crap because I overtraded it, and he made made the entire move. He was laughing at me, so not unusual. So that's where that is. The board really, very interesting board as we walked in this morning. First of all, let me say this, and I'm not pulling any punches. I don't know where Live Squawk came up with that headline this morning that sanctions, or not sanctions, but the EU had triggered fines against Italy. I forgot how the exact headline, but it was really misleading because the fact was they weren't triggered. Again, as the Financial Times headline read, Brussels warns Italy is in breach. Let me see exactly, so I don't want to mislead anybody because I never will do that. So can't stand that. The headline was on Live Squawk. Let's see if I can find it. I'm looking for it. Was that Oh, here it is. It was, and I can tell you, it was on Live Squawk. EU triggers disciplinary process against Italy over public debt. And you know what? That headline led to a severe break in the. You can look at the VTBs.
Yeah, just set them up.
Yeah, and they're actually higher now, as you can see on that chart. So the range has been pretty big, but it came off of that. And that was real, and that came out at 6:25 a.m. And it was just totally misleading, because that's what that. And you know, I don't know who owns Live Squawk, but they put out a lot of headlines that I think are meant to disrupt. That's just my opinion. Who am I? I'm a trader. I watch this stuff. I have no more influence than that, but it is. To me, it's almost done to trigger, to create volatility. And you see it. You see it. Gold rallied to its highs. That's when the gold-silver ratio ran up to its highs. You saw a lot of things, and especially you could see it with the Italian bonds. And you can go trace it right to that headline. Go ahead, Judd, put up a 10-minute chart.
Okay.
You can see it. Put up a 10-minute bar chart.
There you go. There's the 15 right there, 6 o'clock in the morning.
Yep. So, yeah, I mean, you start to see. I'm just calling it attention because this room is populated by traders, and you have to be aware of it. You know, this was what I just ran for a board seat, and from the B members at the on the IMM because I sold my seat, and I lost. Not a surprise. It's for a guy who never lost elections. It's very hard for me to win now, the way it's structured. But one of my issues was about these misleading headlines, and I thought that the SEC and the CFTC should be looking at it because there's a proliferation of people with media credentials. And at first, the exchange didn't want to allow it into my letter because they review your letters under SEC guidelines because they're regulated by the SEC now because they're a publicly held company. But then when I argued my case to them, they saw the wisdom of it and actually allowed it to go into my letter. And in fact, I got a lot of responses from people who are still traders and own their seats saying that they too believe this was a serious issue, and they thanked me for bringing it up. So I'm just calling it to everybody's attention because it needs to be brought to people's attention. And I still want to find out who owns a lot of these new quote unquote media outlets. So it's one of my goals.
Okay, guys. Ira, you have any thoughts about tomorrow's Draghi farewell?
Well, there'll be nothing. He's trapped in here. The Teltro is taking place. There's nothing he can do, and he's not going to rock the boat. And he has to now. It's interesting as we've talked, and Pax, we've talked about the currencies, and I said, that I was lifting a leg, last week because I thought the dollar was subject to a little pressure here. Now I don't know. The euro is getting up. Is going to go take a peek at that 200-day moving average. What's it come in at, Judd? 113.60 or so. It's somewhere up there.
It's I'm looking at 113.72. Hold on, let me make sure.
Is that in the cash?
That's a cash.
Yeah, that's right. That's right. That's what I was looking at this morning too. And you see how it corrected off of there.
And it's trying to put an ORL day in.
Yeah, I know. So there are a lot of things going on here, but I don't think we're going to see anything from the ECB. They'll all be singing their praises and kind of posturing. So if Draghi, the only thing that'll be interesting that if Draghi, I think the meeting's in Vilnius again, which is in Lithuania. I don't think it's in Frankfurt, but I could be wrong. So those get a little bit more interesting because he may, it'll be interesting to see, again, the press conference always will be more interesting tomorrow, because I'm sure he's going to be peppered with questions about, does he have a favorite, which he'll avoid, of course, you want to answer, but they'll ask it. Is there anybody you'd like to see? What about the U.S.? There'll be a lot about trade and tariffs, and so we'll hear a lot of that. But I don't know what else they can talk about. The economy in Germany is certainly, the data has reflected slowing. The unemployment number was not good last week. Inflation numbers aren't good, even though I find that to be a joke anyway across the entire spectrum. So you're not going to see anything. There's really nothing he can do. The United States rates have come down a little bit, and that's what he'll speak to. Well, U.S. rates came off, so of course the dollar is a little weaker and the euro is a little stronger. Nothing to be surprised about there. And he'll speak to some countries in Europe are beginning to see better results. He'll talk about probably Spain and Greece. Germany softened a little bit. France is meandering. He'll avoid really speaking about Italy because he has to be very careful there. But he'll get questions about Salvini and the fact that Italy is violating the Maastricht rules about what everybody has. So there's really nothing he's going to speak to on that. I would say I'm not looking for anything. He's just going to dance his way around this one. There's not much he can say in regards to anything. And again, we're how many? 4 months away, 3 months away from his retirement. It's June, July, August, October 31st. So 4 months. So
DAX
4.5
Bund is
months.
right on its 200-day moving average.
What is
The DAX Bund? I mean, it's like, where are you getting a signal here from anything?
Nope. And you see the European bonds, you're getting some movement, even with the U.S. Rates where they are, where people really are in a situation where they have to go search for some yield, because again, it's all about search for yield. And you'll find it wherever you can, which is, interesting that I thought people were really buying Italians regardless, because everybody knows they're going to violate this, and there's not a damn thing they can do. There was that Ambrose Evans Pritchard piece. I don't know that I sent it to you. It was really a good piece last night. It needed to be. I'll send it to you now so you can go to the room. Oh, there it is.
And the dollar index is trying to come back off this area. I don't generally look at that.
Yeah, I know. And it's, what? It ran into resistance, and now it's finding support. This is a very important piece I'm sending you. I'll send it to you, Judd. You can do it as you want. These are the issues that are out there. And, again, the yield curves really popped today. Now we're solidly above the 200-day and the 210. We got the 530 all the way up to over 80 basis points this morning, which was interesting. That's the one that's been, more forceful anyway. But we did get that action, and that's because now it's for the exactly right reasons, because now they're worried that the central banks, with all the Fed talk, they're worried that the central banks are in a little situation here where the world can see that maybe they really don't know so much what they're doing. And if you start to believe that they don't know quite what how these outcomes are, you got to get a little nervous, because there's a lot of risk. They've got these massive balance sheets, and everything else comes with them. So we will watch it. And again, we talked about the Aussie Kiwi the other day. You look at the movement that we got off of that after the Aussie cut rates. Now it hit the 200-day moving average, and now we've really dropped about 1%. And now it's going to be New Zealand's turn. So is New Zealand going to cut because the Kiwis gain some strength against the Aussie? That'll be the next part of that discussion after the ECB, of course, does nothing tomorrow. And I'm never as certain on this. But sometimes, you know, you look, you know, I always assign some probability that the bank can do that, but I just don't see it whatsoever with the ECB. So I assign it 0 probability.
Yeah. I mean, guys, this is what we were looking at the other day as a sign for risk off. And you got the risk off. So.
Well, so Judd, that's, or Ira, both of you guys, that's what's been confusing for me and for the traders that I've been talking to, is that we've got so many risk off signals in the markets, from the yield curve to the strength in the gold. And I know that, I know what you mean by, Judd, you were talking about the stock rotations earlier, and Ira, same thing with on the macro level with looking for yield in anywhere that they can find it. Anyway, where,
you know, but that's exactly right. But that's important. Don't minimize that, because that's really an important outcome. Now, you know, we talked about it, and let me come back to something else. You know, because we talked about the Russian, that ETF, which has really held up very well here. And again, it's holding up. In fact, today I actually bought some. I had $22 RSX. Yeah, I am a commie. What the hell can I do? but look at oil. If you do the overlay, if you overlay the crude oil with it, it's interesting to see how this relationship is starting to change fairly dynamically.
There it is, right there. Long Russia, short crude.
Yeah, and you see how it was really highly correlated, but the correlation is starting to change a little bit. So more than a little bit, as we're making high. So I'm gonna in my blog, if I write it tonight, I think this is a very big thing. By the way, I truly believe the U.S. is going to remove sanctions from Russia. Now, before you tell me how crazy I am, there's a couple of things that have been going on, of course, you know, that get hidden or not, that are on page 6 rather than on page 1. I'm speaking metaphorically, by the way. Is that, first of all, Putin pulled back support of the Russians from Maduro down in Venezuela. So when there's all this other noise, that did take place. In Syria, the Russians have been pushing back against the Iranians. Now, Putin's had a lot of leverage, you know, and he's not a stupid man. He may be a thug, but he's not a stupid man. And he's got room to give, but of course, it's a give-get. And don't forget, he controls Assad. Whatever happens there, you know, it was Obama who let Putin in, and this is not, for anybody new in this room, I'm not speaking of politics. This is not Democrat, Republican. This is just the lay of the land, which is important to understand. They let him in. Putin has a lot of leverage. Now, supposedly, from what I've read, and I don't read anything secreted. I don't have access to secure documents. You don't need it because it's out there. But Putin has been pushing the Iranians out of the Russian port, out of the Syrian port that the Russians control. He's also been allowing the Israelis to hit the Iranians pretty hard, storage depots that support Hezbollah. So watch this news, because I think this is significant, and it is the give-get that Putin loves to exert. So pay attention, and if you look at the RSX, I mean, that's the only reason I can find in my brain when I analyze this, is why this stock could possibly hold up here when it has been heavily correlated with price with crude oil movements, and yet now it's going the other way.
And you got an ORH quarter working too.
I mean, the chart looks very good. So, and it pays a 4.5% dividend. So, you know, I'm speaking to you now with my investor hat on, more than my trade, certainly more than my trading hat. But then I look for trades that come out of here, and it gets in. gets interesting. I've been watching the ruble too. I know, but actually, the ruble is a really good two-sided market. It's only for crazy people, but so be it. I also trade peso, but it's one of the interesting emerging market currencies. And again, that's holding up here fairly well. It's another one you could do on an overlay with the crude oil, because it usually gets hits with the crude oil. So I'm just watching. There are things afoot here. You know, Judd, I always am looking, not necessarily where everybody else looks, because the market is sometimes like a magician. You know, you don't watch his hands, because you're going to only be fooled. There's other things going on, and it does get interesting. So I just bring that to everybody's attention.
Have you given any thought to, at a very basic level, the fact that growth and inflation are improving in Russia?
Oh, yeah, absolutely. And you know what? Let me tell you what. And I'm not trying to get people to invest in Russia, but they do have one of the better central bankers. She's really good, and they've raised rates to crush inflation. They have a real high return on capital. You know, unlike in the U.S., where at interest rates of 2%, your real rate of return is 0 on your money. By design, in Europe, your real yields are of course negative. Germany, you're getting crushed because, again, on your 2-year note, you're getting where are we at this morning?
In our twos or theirs?
Yeah, we're minus 66 on their twos, and they're running an inflation rate of about 1.4. So you're only to inflation, which we call the real yield, is only about negative 200 basis points. Yeah, no big thing there. Listen, keep it there for 33 years and you'll be broke. So, well, I mean, that's what any economist would tell you. So that's where we are. So that is a good question. But they've been doing actually a pretty good job. The problem is those sanctions really harm. They've really hurt, and the Russians, are very aware of it. The oligarchs would like to be able to move their money freely. The Iranians are complaining about it too, and Trump keeps saying to the Iranians, "I'm willing to talk. But there won't be conditions. Don't put conditions. Let's sit down and talk and see what That's his throwback, and believe me, Putin's playing a very important part in whatever's going on in the world, because it's not that the Russians, are so, they're not strong from a traditional realpolitik view, but Putin has the ability to create mischief. And the ability to create mischief is a very powerful lever in the ability to negotiate for positioning, and that's the key. Is that everybody wants to position themselves as a player and to be able to negotiate. And if there's one thing President Trump understands, it's using leverage, whatever leverage you have for whatever negotiation. In his case, it's usually owing somebody $1 billion. So, well, hey, listen, he has survived by that. We can laugh at it, but he has survived in the New York real estate market because he borrows so much money that he's usually able to get concessions. So it's whatever leverage you can apply to get what you need, to get your demands met. And as we laugh, you are laughing, but as the old saying goes, when you owe the bank $100, they own you, but you owe them $1 billion, you own them, and that holds true. You see it everywhere in the world. That's why the Italians have the edge. So you can't believe one thing that the newspapers report, because they're going to report what Brussels tells them, because that's what they need access to. The Italians right now, and I just sent that piece to you, Judd. You could. It was written by Ambrose Evans Pritchard, and it's really a good piece that was in the London Telegraph last night. This is significant. And the Italians know the leverage that they have. They know. And the Germans, that piece that he comes up with is that the Bundesbank put out a piece and said that if the Italians were to really get in trouble, it would cost Germany a lot of money, far more than Greece. And that was, it doesn't bode well for Merkel if you accept what's in that article. And it's a very well written article. You can argue it all you want, but argue the facts and not the emotions. And the facts are the Italians have a lot of leverage because they owe so much money.
I know.
They owe so much money.
Hey, Ira, it's Matt C. How are you? Thanks for the time. Really appreciate it. I'm having a hard time reconciling the dollar shortage theme that we've been discussing and the fact that the Fed's the only one with the room to cut. Ultimately, the Europeans had their chance a while back and they didn't normalize a bit, and now they're stuck.
Right.
Japanese rates are stuck. Since the end of last year, rate differentials have come down a great bit, but we're still the ones with the juice left to squeeze. I'm trying to temper my enthusiasm for getting long in gold and dollar terms because of that structural short you were talking about. But ultimately, doesn't the Fed have to just drive the – isn't the Fed the only one on the hook that can provide stimulus when needed should things deteriorate further from here? How do we reconcile that view, and when can I really get long gold and dollar terms?
Well, you have to watch them carefully. And, that's been my point with Richard Clarida. He keeps speaking to this because what you're talking about, Matt, is that, what I've maintained, the Fed doesn't have a dual mandate. Yeah, I know that's what's written into the statute. They have a triple mandate, what I call the trident. And you picture whoever's Fed chair sitting there like Neptune with a trident in his hand because it's three-pronged. First of all, I find the mandates nonsense anyway. And I was astute enough and alive enough when they were put into place, the dual mandate supposedly, because the world is a reserve dollar situation. And you saw it in the great financial crisis when what did the Fed do? They opened up the swap lines, dollar swap lines, because there was a shortage of dollars throughout the world, the emerging markets as well as the developed world. So the Fed was busy swapping dollars out for whatever they took in promise to repay. So they met that obligation. When the Fed started down this raising rates at the same time as quantitative tightening, I argued vehemently on Santelli that was the wrong approach. Do one or do the other, and most probably they should have just done quantitative tightening because you don't know what the real impact was going to be. And Yellen and company was saying, no, it's going to be like paint drying. It hasn't been paint drying. And Druckenmiller, back in December, made that in that interview talked about the double shotgun approach, which was causing havoc in the markets because you were taking liquidity out while you were raising rates, and you could see it in the money growth numbers. If you're an old time monetarist it was having an impact, and that's what the Fed gave into. So when Powell did his pivot, the real impetus for the pivot was, as we saw, the real impact came from once the Fed said, well, we're cutting back quantitative tightening by $15 billion, and then by September 30th, we're going to end quantitative tightening totally. So they were basically admitting that this two-pronged approach was a big mistake. That's what the mistake was. So there was dollar liquidity shortage, and you have all these people borrowed in dollars. You have them all why? Because the dollar was the funding currency. Now it's shifted a little bit, which is why the dollar has strengthened, because you've had, as U.S. rates have gone up, it's been too expensive to use the dollar as a funding currency. So you're funding everything with yen, Swiss francs, and euros. So now when some of that starts to unwind, that's why the dollar has been soft here a little bit, because as people have gotten nervous and U.S. interest rates have come off quite a bit, people are actually moving to lift some of those positions and buying back those currencies because there's a lot of uncertainty building. You see it with the Japanese quite a bit.
And here's the yen right here, Ira. It's trying to put a reversal day in.
Yeah,
right.
Yeah, you know what? The interesting thing is the only thing that really hasn't reversed is the gold. Now, if the gold would, close over on the day, which is still, I know the pits closed, but they got until 4 o'clock. That would get really interesting. Of course, gold has dropped $15 off its highs, but that would really get interesting. And I've been bullish gold. Again, if we ran into the ceiling here, I'm still bullish, but I think it's been a very frothy move quickly. Although where is it going to close? It becomes important. But Judd, that's right. You're seeing reversals on a lot of things because, again, we'll call it risk off because that's what the market wants to. But there's all these positions, whether dollar funding or not. And we'll go back to Matt's question: is there enough dollars in the system? And yes, the Fed backing off a little bit on quantitative tightening, the interest rates coming off, and even in all this uncertainty, as we've talked, when was it, yesterday or the day before, the emerging markets have really held up well, except for Mexico, and that's being unwound too. And of course, the only thing that I regret we talked about yesterday is that, or 2 days ago, that Kansas Southern was going to be a good parameter for what was going to actually go on in Mexico. And the pushback against Trump has been real. I mean, he's got, congressional people from Mitch McConnell to Grassley to others who are going, no, this is a very bad idea because it really impacts a broad array. And this is Trump's, they're so quick. These tariffs and sanctions have worked so well. That's all they know. But yet, they're so broad-based in their impact that they hurt a lot of people who this administration needs their support.
All right, guys, anybody have anything else they'd like to discuss? Pro, flip a coin. I want you to do both. It's asking, are we selling or buying the S&Ps? I just went through every single one of these ETFs for you. Well, the utilities have a huge bid to them. The XLF does. When we were talking Monday when Kansas City Southern was bottoming, we were looking at the XLI at the same time, was trying to put an ORH day in. And so we're, I don't know, what else was it? The industrials, I think this, can't remember if it was the staples. All the stuff had engulfing bullish patterns. The only thing that didn't act well was the XLE.
Yeah, and you know what? And you saw it. That's funny because we did talk about the banks, and we talked about the yield curves and how everybody comes out. And yet you got the steepener yesterday. They started to steepen. They didn't. And look at how the banks popped yesterday because they're so tied in. Well, the steepeners. I mean, these curves aren't steep by any stretch of the imagination, especially the 210, but they stopped flattening. And look at how those banks turned. And I actually listened. Unusual for CNBC because I happened to be in the car, so I had it on the radio. And that discussion between Mike Mayo and Chris Whalen was interesting. I have a lot of respect for Chris Whalen. Mike Mayo, he's historically been a good analyst, but he's been banging this drum for Citibank and Bank of America for so long, and he won't stop until it eventually is going to be right. But Chris Whalen, was making some very good points. But these yield curves, for as much as the banks popped yesterday relative to what the yield curves did, I found fascinating because those were big moves. Goldman got a good pop. JP Morgan got a good pop. Citi certainly got a good pop, all off the steepening curves, which were nice moves on historically on a yield curve. But, really, that would prompt that much move. And now the market's really, though, going to be a little confused because that ADP number was so bad this morning. I mean, bad relative to what they were looking for. So now everybody's busy ratcheting down their numbers or data for Friday on the unemployment number. Let's see, where was that at?
Even the
it was probably about it was 185.
Yeah.
Yeah, Judd, check out today's ORL in copper.
Yeah, terrible.
Where is that thing? There it is. Oh yeah, that's ugly. Yeah, and I was looking at that earlier this morning. I think I mentioned it in the room, and because I was looking at silver copper and gold copper.
Yeah, and silver copper has been really interesting here. And I know we've talked about it. I think this is very important because now they've been given. But look at how that has moved over the last 3 weeks.
Yeah, that's just been a huge move.
Yeah. Let's see where the 200 week is up at 63. I mean, we're at 56.37. That's 5 point, the ratio. It's a ratio of how many ounces of copper to an ounce of silver. So
yeah, that is a ways up there.
Yep.
So Ira, you want to buy financials with a growth forecast that looks like that?
Well, you know what? The U.S. financials will be relatively strong because as long as the Fed doesn't get too aggressive. If the Fed stays tight and the curve reflattens, no, you don't want to buy financials. But if these curves steepen, the financials will perform fairly well, unlike in other places, because again, for a lot of global investors, meaning pension funds, insurance companies, anybody who has to manage their assets and liabilities for payments, they're forced into this. So, yeah, and again, I'm going to tell you what, and I'll go back to December. Because I buy preferred stocks, especially in the financial world. And in December of 2018, my portfolio, which is a conservative portfolio, lost 8.8% in the month of December. Now, it's made more than twice that back, but what it did was it forced me to get rid of some of the more speculative ones that I would say, companies that, which what I would probably say are double B or triple B rated. And I said, I'm not chasing that little extra because I saw the hit I took. So, I mean, they're out there, and I stay there, but I'm watching. I moved everything to JP Morgan preferreds, and I had to hold my nose and bought some Wells Fargo because I find them morally reprehensible, but I had to put on my mercenary capitalist hat. So, I mean, that's basically the two issues. I rolled everything into those two issues, and it's really been a good move. I did it about 2.5 months ago, and they've held up very well. So, again, I put a lot of eggs in a basket, and I'm going to watch that basket. And but there's room in here. That's my point. So the financials really, and if they, now they got a CCAR rating evaluation coming up, and they might, as Mike Mayo pointed out yesterday, and they may well be able to increase their dividends. So in that regard, yes, especially as long as these curves don't flatten again. If these curves at least stay here, then people who have been shying away from financials may say, okay, I got to play here only because on valuation basis. Because on a valuation basis, the banks are cheap relative to the market as a whole, but they're cheap for a reason. You know, sometimes things really are cheap for a reason. And it's not just neglect, but it's, you know, there's a fear to it. But if these curves stay steepen a little bit more, then it's probably the right place to be.
I mean, I know everyone in this room, you know, there's mostly traders in this room. I am not. But the financials, you know, they peaked on January 29th of last year. And if you look at a longer term chart, they're doing nothing but making, you know, lower highs. So, you know, for me, you know, that doesn't bode well, you know, on an intermediate term trend.
Well, that's exactly why people have been afraid of it, though, and rightfully so. I mean, you look at them and you go, what's going on here? And then when you look across the ocean and you look at the European financials, you go, uh-oh. And then you look at the Asian financials and you go, uh-oh, do I want to be in these financial, you know, and people rightfully get unnerved and move to, you know, when there's some storm warnings, you know, smaller boats move to shore, you know, go look for safety. And that's what needs to be done. So there's a reason. People haven't been stupid with that. They've actually, you know, while all the experts have been calling for higher bank stock prices, they have, you know, Mike Mayo has famously been out there, you know, oh, I'm buying it. And these have way underperformed what all the professionals were pitching. And I think you're right. You know, you call it exactly right. Look at, we keep making lower highs. And when they do break, like in December, you broke hard. Look at where Goldman went to. Yeah, I know Goldman had some legal issues, of course. Morgan Stanley's kind of treaded water here. It was doing well, but they kind of lost their mojo. And yet, you know, the returns aren't bad. You know, there's one that I always look at. Sometimes I buy it, sometimes I don't. AllianceBernstein, because they're one of the better warehousers of institutional money.
What's the symbol, Ira?
AB.
Got it.
You know, and it has a strange the way it's held. They're moving their headquarters down to Nashville, Nashville, which I give them credit for, because why would you want to be in New York? You know, the cost of being in New York is so high. Why not move to Nashville? Yeah, I know. I know the benefits of being in New York. I've lived there. I've done it. People actually walk off the street. You know, it's much easier to raise capital. But you know what? The nation is shifting, and the Southeast region has a lot of wealth there. You know, that's why I always like that Florida Community Bank, which was taken over by Synovius Financial, which has been a disaster from the day they announced the takeover. But there's a lot of money, you know, headed to the Southeast. And if I can, you know, in electronic age, why do I have to be in New York City? Why do I have to be on 6th Avenue? That's where AllianceBernstein's headquarters were, or it still is up until when they move. You know, and so I watch that because the dividend is good, but it's a volatile. It's for a company like that, because when when stocks are going down, it goes down. When the market is volatile, because again, they do a lot of institutional advising and trading, so I guess their revenues head down. But you know, there are still some companies out there in the financial world, especially relative to the Europeans, that are actually worth looking at. And especially relative to the Europeans. So Deutsche Bank's back under 7. I see UBS is weak. Barclays is a joke. I mean, the Japanese banks, and I have the scars to prove it. For 11 years, you know, thank God I've made so much in dividends that I'm about even. You know, not even, but if it went to 0, I'd probably be even. But it's a silly way to invest, but here I am looking for those. So I always think, well, why don't these things pop? They basically have. There's only a few really big banks left there, but they can't get out of their own way. They can't make any money.
Yeah, you want to yield? Buy Banco Santander and watch your principal evaporate 100%.
Yeah, classic. And believe me, guys like Kramer, they've been screaming about what a great bank Santander is.
I mean,
everything but the stock.
I had a guy who goes, yeah, but it's such a great dividend. I said, yeah, but why don't you take a look at what you paid for that dividend? I mean, and
Right.
this is what I've got up is the new Santander, and it's not the old one that was up into the 20s or 30s at one point.
Right. Yep. Yeah. No. It has been a dismal underperformer, and it's not alone.
Yeah. All you had to do was buy McDonald's.
This is how the central banks have broken the financial system, and that's the fact. Everyone says it's broken, and they cannot get out of it. And believe me, it plagues them because they don't understand it either. By their models, these financial institutions should be running very strong here.
Ira, go back to that cartoon from the other day.
Yeah. And who is that, Angela?
We're lost, aren't we?
Is that Angela?
Yeah.
Yeah.
That was good.
That's true. We are lost. I mean, not me. I'm not lost because I don't have to. I'm not responsible for that. And everyone will say, well, yeah, that makes a difference. That's a policy. Yes, you're right. It's a policy. But, yes, that's the profession you've chosen. And, and the problem is they can, that's not true because Powell at least admitted that whatever they did in December was a mistake. And more importantly than actually raising rates in December, people forgot, he said that the quantitative tightening was on autopilot. I'm quoting from those press conferences. It's on autopilot, meaning they were going to, it was just, and then all of a sudden, that's what he danced off of. It was no longer autopilot. In fact, not only is it not autopilot, we're cutting its size, and by September 30th, it's going to be over. So that was a far cry from autopilot, and that was actually the most dovish aspect of anything that the Fed did was that statement, removing the autopilot. Because autopilot was a pretty severe, the beige book's out. So what did we see there? Probably nothing.
Yeah,
The market.
So everybody now wants us to give them the next 10 points in the S&Ps. I mean, how ridiculous is that?
Well, listen, but that's what, you can't, I know it's frustrating from when you sit here and my job is analyze the markets and look for opportunities. But if that's what I'm a believer, you can only take what the market is going to give you. And yes, we've seen some enormous moves this week, enormous moves, and not in high risk areas either. The interest rates have been, if you look at the Fed funds contract, which is truly like traditionally watching paint dry, there have been wild moves. I've been trading the August and November Fed funds.
What's
some
the
days
symbol?
really good. The electronic symbol or the?
Yeah.
Okay, hold on. Let's see.
What do you got? The CQG symbol.
Okay, I'm gonna give it to you. If you look at these charts, it's for August. It's ZQEQ 9.
Okay,
and then ZQEX 9, which is no. Look at that move. This is Fed funds. This only moves when the Fed, actually moves. But you look at the trade that's taking place here.
Yeah, those are big moves. It doesn't move like that.
Oh, yeah. I mean, it's been a wild week, actually 8 days, and especially since Friday, or Thursday evening when Trump set it off with the 5% tariffs on the Mexicans.
These are like flatline for 2 years.
These markets have been wild. I mean, I've seen movements and things that are really traditionally very slow movement, but this week has created, the currencies have had, look at the moves in the Swiss yesterday. I mean, the thing was down, and all of a sudden, what it closed, 80 ticks up?
Look at the crude.
Talking of fortune.
Yeah, well, dollar Swiss is trying to put it's coming back to its 200-day moving average right now.
Yeah. I mean, these have been, look at the move today. The Swiss has a 100-point range or 90-point range today. 90-point range. Look at the euro. I mean, and yesterday the ranges, were, because as the Fed, as every media outlet was interpreting what Powell said yesterday as though the Fed's cutting the Fed, so you got reversals yesterday, fairly sizable. And Monday, this has been a wild week.
Yes.
And we haven't even gotten to the unemployment. I haven't even discussed the equity markets, which have been crazy wild this week.
Well, Ira, you know what? I mean, the Dow has been down 6 weeks in a row. The S&Ps were down 4 weeks in a row. Oil,
right,
including this week, is down 6 out of 7. I would say they're due for some sort of a bounce. No?
Well, yeah, I don't know. But again, I'm going to go back to my Russia comments. And is that a reason here? Does the crude oil market know something that about what's coming? Because, what's Trump want? Trump wants low crude prices. How many times has he said it over the last year? When he warned OPEC, you got to increase production. There's no reason, because he wants low crude prices. He wants low crude prices. So is that part of, if I'm right? And again, I'm just looking at the at things that I look at as the market, and trading is my living, but analyzing is how I get there. And if my analyzation is correct, something is up here, and is Trump trying to exact, Russia's cooperation as far as ensuring that there's going to be plenty of oil.
That's interesting. Ira, that is really interesting. I love that analysis. So, and that goes back to what Judd was saying. Everybody's looking for that, and what I said on Credeli's show. Everybody wants to see that what's the S&P doing in the next 10 minutes or the next 15 minutes? Where's that silver bullet? But pulling all of that back into the conversation or the thoughts that you had about Assad, well, Russia, about Putin and the give and the take, and then Trump and the art of the deal, and all of the stuff that I haven't heard anybody really. I've read things about us pulling back sanctions from Russia, but I haven't heard anybody talking about it. I haven't heard any really good analysis yet, at least not in the mainstream. So when that happens, what kind of hell is going to be breaking loose out there? Meanwhile, it's just where the world is headed, and people are missing it. And so because they're missing it, they want everything handed to them on a silver platter and don't have to work for it.
Oh, sure. Listen, that's Judd and I've known Judd 42 years of doing this, and that's always the case.
Right.
Everybody wants it handed to them. You know what? Listen, I have 5,000 blog readers. And if I tell you the private emails I get from guys who know me on, and they go, "You didn't tell us where to buy that. You didn't tell us where to sell that." I go, "No." And I've said to guys, I said, "You want me to tell you that? Then pay me X amount of money, and I'll be happy to tell you what levels I'm using." And because I said, "What are you going to do? You're going to hold me responsible. You're not even paying me, and all I'm going to do is get beat up. Go do as you know. Every time in the blog, I go, I'm just discussing it. You go do the work. You know when you're right and when you're wrong. And find your risk tolerance, because everybody has a different risk tolerance. Some people will risk, 6-10% on a trade. That's well beyond anything that I orchestrate for myself. Other people, won't risk, 1/10 of 1%. So you have to go find it. And do you see something there that's worth pursuing? Then go pursue it. And that's what, that's my joy, is if I do this right for myself, and the feedback I get here from sitting in this room, and the great commentary that streams through my blog, which has really been great. These guys, there's one guy, who's just been all over buying the red euro dollars throughout this whole time. And if you would have stayed with him, you would have made 60 or 70 basis points in those red euros. And he's been adamant about it.
Matt
the dialogue.
The other day,
I'm sorry?
Matt Cicero and I were talking about the June euro dollars had an 80 basis point move just this week.
Yeah, that's another one. And people slept all the way through it because those curves have moved. But you got to go find your own way as to, Judd, nobody's getting it all handed to them. You want it handed to them? Well, you know what? No, because you're only going to get into trouble. But if you pay attention and you read enough, and you can discern this stuff. Otherwise, then you know what? Then sit there and trade tick for tick. But then you're competing with the high frequency traders, and good luck with that, because I gave that up 15 years ago when I saw the way they operate. I go, I can't spend enough money to outpace them.
I'm bringing something over right now. There's your reversal in the S&P 500 on the 100.3. That confirms this last low. So now you need above 28.41 is the weekly ORH number. And so you got battle lines being drawn here above 28.40 and below 27.30 on the long-term point and figure. Ira, I'm going to send this to you right now. This is what I was looking for it to turn yesterday, and I thought it was going to turn early this morning, and that's what got me bearish early when it rejected it. Just sent it to you.
Hey, Ira, it's Matt again. That's me.
Yeah.
So I've done, a ton of reading. I've gotten a lot of the macro calls right over the past few years, but I'm a horrible risk taker with my own capital, right? I'm working with Matt and Judd. They've been tremendously helpful in at least getting me out of my way and on the right path. But I was curious, how do you implement your macro bets, like in actual terms? Like, how do you go about putting on a macro trade in terms of defining risk and getting involved?
Well, I can express them all different ways. I'm comfortable in the futures market. The leverage doesn't scare me because I've grown up with it, and I respect it. If you don't respect it, you're going to be in trouble. So I look for, again, I'm looking for the best value place where I can execute at and say, oh, this is a good level for me. These are good levels. I think this is going to, I'm willing to do that. Because my expertise is seeing this. I go back and do you guys remember when the Swiss pulled the plug on the peg?
Yeah.
Oh, yeah.
Swiss franc, January 15th, 2015. Well, you know what? I was on Santelli a week before and a month before talking about that trade, going, I'm watching this, and my analysis says something is going on here, because that peg was held at 120. That was the floor on the Euro Swiss. And I said, the Swiss are intervening all the time, and they can't drive it off the floor. Be very careful here, because I know enough when you try to fix the market, you don't get the results you want. Be very careful. And the guys who I were working with, they bought options. They bought puts on the Euro Swiss for like 2.5% vol, 3% vol. They caught the whole play. Yeah, because I kept hammering it. I kept looking at the chart. I go, you cannot drive this up. So that's one, but they had to go find their own way and express it. They made far more than I did. Me, you know what? I could see it. And the Swiss kept denying that there was, no, we're not breaking the peg in the market. Every analyst out there, I go, yeah, but the price is telling you something is wrong here. you know what? Somebody knows something. And of course, Christine Lagarde was angry because she was upset that the Swiss didn't call her. Well, they didn't call her because they knew who would be front running it. Sorry, Christine. I have to explain the world to everybody. Yeah, that's exactly right. We don't have to go too far. Philip Hildebrand. His wife was trading. Yeah, he was already gone, but so he made a little money when the big money was on the table. So Matt, so I just look and find ways to express it. Can I express it in options? It's really been a hole in my trading for the last 25 years because things that I could express when options are cheap, you sometimes, meaning when I say cheap, the vol is cheap and you get an opportunity to express it. But otherwise, I'm always looking, whether it's, in the yield curve. So I found I've been long the 2s and short the 10s, and that's worked out well this week. But there was a lot of give and take. But that's what you have to do. Now, if I'm a longer term, I'll express it in stocks. Like my view on Mexico, and Judd knows this. I started buying Kansas Southern at $92, $89 because I had a view that and so one of my blog readers, I had breakfast with her and she said she expressed my view on Mexico at that time on Constellation Brands and caught a major home run because she said I was looking for companies that should really benefit. And she did really well with it. She said, let me buy you breakfast. I said, you don't have to, I'll buy you breakfast. But you find ways. So I'm always looking for different ways. It's just like we're talking about. Can I go express it in bank stocks? Maybe with yield curves, because that's what the market's going to do. I'm just not as a firm a believer as what most analysts come out and talk about flattening, steepening, and then it becomes the narrative that they want to keep expressing. But there's money to be made. I mean, if you would have played the steepener yesterday by buying bank stocks, you would have had a phenomenal day. So
Ira, let's
I'm always looking to express it.
Let's get into that for a second. That even in this room, we're always talking about alternative ways to play the trade.
Right?
Is there a surrogate way to play it that's low risk for you that you have a comfort level in? And if you spend some time looking around, and we do in the room all the time, you'll find something that you can articulate the view.
Yes, that's exactly right. Because there are many ways. That's why it's all derivatives. The market is just one giant ball of derivatives, meaning that one thing is a derivation on the other. And if I find my best derivative value in something, that's where I'm going to play. Because if it's, I may not make as much, but I may be limiting my risk. And isn't that what this is all about? Isn't that what good investing is all about? Good trading, limiting my risk with upside potential. And sometimes I'm willing to take less upside if I can cut my risk. That's to me the ideal trade. And if I find the perfect trade, which got me in trouble, I'm going to give you a phrase. You can all laugh at it, but it got me. Some guys were looking to give me a lot of money at somebody else I was working with. And we went in to talk to them and they said, well, because the other person was a technician and I'm basically fundamentally based, but I certainly understand technicals and can read charts and different technical analysts because you want to know how to do every aspect of the market. So, and they said, well, what happens if the fundamentals and technicals line up? And I said, well, then we're and this is the phrase, so have a good laugh, full tilt boogie. That's what I said. This was 1992. And they looked at me like their eyes glazed over. What does that mean? I said, well, then we go to we're margined up to 70 or 80% of our net capital. Well, that scared the shit out of me. They said, nah, you're not for us. And even though historically my drawdowns, but hey, if all the work sizes up and you go, yeah, you can get blindsided by anything. Here, Trump, 5% tariffs on Thursday evening. That was a blindside. You can get blindsided by a lot of things, but most things that you see the market is setting up because, again, there's always smart money or inside money that knows. But you can get blindsided. But that was a minimus, really, outcome from that blindside. But and I never used that phrase again, but I meant it because when everything, it was the proverbial perfect storm. When everything sizes up, when you're getting a breakout, you're getting momentum, you're getting a price breakout and momentum breakout, and volume is showing it, that's a pretty good signal that you're onto something.
Ira, when that happens, do you go all in, or do you make an initial purchase and then scale into the trade as the trend continues to validate your thesis?
Well, that's the part I'm still learning every day of my life. You know, when to add, how to add, because that's what we're talking about. Some really good traders like Druckenmiller, they're throwing it all on. When they see something like that, it's like, you know, Soros, and Druckenmiller talks about it, that Soros helped him because he said, well, if you think the trade is right, you go all into what your risk tolerance is. What are you parceling it out? You know, so I'm still learning that because, again, you know what? I respect, first of all, everything that we're talking about here today, I could be dead right. And I've been right a lot lately with you guys, you know, what things we've talked about. I've really been pretty on target. But my first response is, why can I see this? I must be wrong. So everything I do, I take apart from, I must be wrong. Why am I wrong? Who should I read that may have a difference of it? And I don't buy into narratives, mass narratives. So I'll go do my work, and there's certain people that I'll look to and go, oh, I know he'll have a different view on this. Let me see why. And it's one of the great things about writing my blog is that people will write in. And I'm not talking about the whack jobs because we've really gotten rid of the whack jobs over 10 years. But people who really have other ideas, and I applaud that. That's what makes it all worthwhile. It's, again, I can't stress this enough. It's about discourse. If I'm sitting in this room and you guys are pushing at me and asking questions, it makes me be better because it makes me ask, because I always ask myself, I must be wrong. My first instinct is I must be wrong because why am I the only one who can see this? Why isn't the market seeing this? And I start from that premise and then I proceed. And that's not easy to do, but that's what it takes.
But the way that I've been showing people how to trade, and I talked about it in Anthony's thing, is Anthony's Crudelli's show, is exactly what Judd taught me. So, which is interesting, because when I first started trading with Judd back in '98, he taught me two different things. He taught me how to trade the opening range, and then he made me read the Financial Times. And so, so I can look up at the board and I can recognize what the macro story is, and then also get used to what are the fundamentals that are moving the market. And I can also look at a chart, and I talk a lot about that during the day. But the way that and I think this is something that, and you touched on it just a minute ago, and Matt C had asked about it, but I think it's something that is not taught enough by, you know, these schools out there teaching people how to trade, is position management. How do you limit your risk in order to maximize your potential? And every trade I make, you know, I pay for my trade. I pay for every one of my trades. So I give up a little bit of upside to remove the downside, because now I can sit with the trade a lot longer and I can let the market do the work and not fight the algos, but make the algos do my work.
That's right. And as my mentor, the great Lenny Feldman, and I don't throw that term around, but he was a classic, not just as a human being, but as a trader. And even though Andy Schreiber would say, you know, for a guy who's never had a winning trade, because if he had a spread on, he would only tell you about the losing leg. You know, shit. You know, and it would be a standing joke because Andy would always go, you know what, he's living pretty good for a guy who's never had a winning trade. And Lenny would always tell me, you know, listen to the market, let the market take you out. Because I'd be trying to massage it, let the market take you, okay. And he was a big believer in lifting some. Okay, it's paid for itself. Now you're stopped, but let the market work to take you out. Because hey, I'm making, if this trade is as good as I think it is, and a lot of times he would do a lot better with my analysis than I would, because his trading discipline was unbelievable, and he really drummed into my head, about how to manage your risk. He was a phenomenal, he was a great risk manager of trades. Great risk manager. So I learned a lot from him. But the great
Well, how about
traders I
when
knew,
you and Jack
they all
doubled up on a loser and he almost kicked you in the rear?
Yeah, and it worked big. And he said, "Are you out of your mind?" Yeah, that night it was in the Deutschmark Yen spread. Yeah, Jack calls me up. He goes, "We're getting killed." He says, "I know you have it on." I said, "I do. I have big position." He said, "What are you doing?" I said, "I'm doubling up." He said, "You've never done that in your life." I said, "I am now." And by the morning, because the Bank of Japan had come in, and I learned one thing about the Bank of Japan is that if they were intervening at night, it was to help some Japanese banks or investors out. And believe me, it took all the gumption, all I had. I didn't risk my life. Believe me, it was not that, but it was. And Lenny yelled at the two of us, "What the hell is wrong with you? You don't double up." I said, "Well, should I have gotten out?" "Yeah." I said, "Well, I wasn't getting out, so I may as well have doubled up." He goes, "Don't ever do that again." And I never did. And even though it worked, I never did it again because that was exactly right. I would rather the trade. He said, you should have quadrupled up once the trade started working your way, but not when it's banging you in the head, because one was a value proposition, the other was a trading proposition, and you have to know the difference. And for me, it's always, from that day on, it's always been a trading proposition. But, and you see, I'm still learning it. Believe me, I should have had 2 monster weeks here, and I've made some, but nothing, because I violate, some of the rules that I know better. And I was actually really getting better discipline. And as we've talked about, and Matt, you know this, Pax, as you know this as well, because I've talked about it with Anthony, those wish orders. Wish orders are a wonderful thing because they give you that discipline. Okay, I can get in. And we talked about it with Kansas City Southern the other day, right, Judd? You know what?
Yeah.
Down at 110, 111, that was as good as it got.
50,
That was as
200
good as
day,
it got.
50-week moving
Yep.
average. You couldn't get a better match.
Right? That was a classic. And we talked about it in this room. So, I mean, and yet it's so hard to look into the face of it and go, yeah, I'm going to do this here. Because your first inclination, if you've been in this business and doing this for as long, you need to protect. My job is protecting capital, which is why I always begin with.
As you know, I use the opening range, and I base my trades off of the price action right now, and that's it. I'm not looking for something that happened 5 minutes ago, 15 minutes ago, an hour ago, 2 days ago to tell me what we're going to be doing now. I use the price action now to tell me, and the price action right now has me a little bit long S&P. I'm not long, but I was, and that's it. There is no magic ball for any of us. This is hard work. It's constantly hard work, and it's always
if
a
this guy
battle.
wants to roll the dice, man, he should buy the XLU or Home Depot or McDonald's.
But one thing I want to get back to this, what Ira just said, and we talked about this a lot. It's every day that I put it onto my Twitter feed, or I talk about it every day in my room. Is I start every trade that I make, I start with capital preservation in my mind. Everything. And so the only every trade that I make is meant to, we just literally talked about this not an hour before you came in. Every trade that I make and every trade that I'm talking with people to make is how do we remove risk quickly? I want to remove risk to my beginning balance that I came in with my very first trade. And once I get those 4 points in the S&P or 20 cents in the crude or 12 points in the NASDAQ, that removes my risk. Now I can let the market roll. I can let the market go. And it's not about my P&L. It's about the price action. I let the market, as you just said, like Lenny Fellman said, the legend of Lenny is let the market tell me that I'm right, or let the market tell me that I'm wrong, and sit back and put my feet up. And that's it.
Right. But it entails doing a lot of work. People used to kind of laugh at Lenny, but I'll tell you what, he was one of the first guys I know, because that was my strength, was being able to read and analyze. but he was busy reading at that time. Jeffrey Bell. He would read a lot of stuff on the global macro world, and people didn't really see that because they just saw his character. But I knew what his preparation was, and it was in depth. And then he would have conversations with people, who he had whittled down to a very respectful population of voices. And he could, because he bothered to read and analyze, he could hold his own in those conversations. And he was smart enough to know, and understand when he was onto something. But it takes a lot of work. Everybody, again, as the question first was formatted, put it on a silver platter and give it to me. Well, I can't. If I was that good, I wouldn't be. No, then I would just be sitting there and I could tweet it out all day, and or find a private room and pay, and people would pay it until you were no longer right. But as you are up against man and machine now, who is trying to disrupt everything that you know and want to do, man and machine, and it takes a lot of work. That's what I can't stress enough to people. It takes a lot of work. I'm not kidding.
It's never just one thing, and there's no such thing as a silver bullet.
No,
That's right.
No,
it takes a lot of work.
You never forget. And when I lecture, and I do a lot of college lecturing, I get invited to speak, and it's really a great thrill for me because they will interact with you, or a lot of them. And I say, look, if you're doing static analysis, you're going to be wrong. If you're building models that are, and that's my problem with models. So many of them are static. This business is dynamic. One rumor comes out. Forget about what you had. Now the world's. So am I prepared for that? Yeah, I'm even prepared for rumors because the rumors have to be within a range of believability, right? You can't. You can't come up with something that's, because it will have no believability. The market will totally ignore it. So you have to, in your preparation, you have to be ready for that. And in fact, I was just reading an article from 1987 in the Tribune. I was interviewed, and I was cleaning out a drawer, and I found the article, and I said, the Dutch have the windmills and the Swiss have the rumor mills, because the Swiss were always good at generating rumors because they profited from it because they were busy. They had the biggest trading desk with the greatest risk takers because they were running all the world's funny money anyway. So most of those financial rumors emanated out of Switzerland, and I lived through a lot of them. So but you have to be. Your prep work has to at least be on the margins of those, because they're going to jump up and they're going to affect markets. And you go, no, that's just ridiculous. One of the great ones was when there was that bankruptcy. When was that? 1998, 1999. That moved the S&Ps crazy one day. It was about a Canadian firm that was supposedly some bonds were being defaulted on. God, I wish I could remember it more, but I remember it. And I go, no, something like that just doesn't happen. And it provided a great opportunity. It was actually a really good day of trading for me, because I said, no, that can't possibly be. It makes no sense. But the rumor was running in the market. So that's again, but that's part of the prep work.
The prep work for me is not just reading everything I can get my hands on, and not just understanding or having an idea of what's going on and what the rumors are or what the rumors may be, but also building good habits. And this is something we've been talking a lot about, but building habits and building good routines in my life that where I'm putting myself in the best position to be clear-minded, open-minded, and well-informed.
That's the key. That's it. That's the key.
Yeah, so as we're talking here, you've got you've got the VIX rolling back through its 200-day. You've got the long end of the curve falling off, and the risk spreads are starting to turn positive.
Yeah, that's right. And watch gold here, as I said. Let's see if that gold can close over today. That would be very interesting to me. Very interesting.
It would be all right with me. I pitched my gold yesterday, but I mean that was an amazing rally. That was really a nice rally from Sunday night on.
That mirrored the exact same move from the beginning of the year.
Yeah.
Up to February 20th. Believe me, I was at breakfast with some people and they were all getting hyped up. I said, I'm getting out here. And the guy says, yeah, I know, because every technician in the world had 1350 to 55, and that's where it got to. I think it was 49 and a half, 50, whatever. But and then, a week later, it was $65 to $70 lower.
Yeah, I mean, I got out early. I got out $10 before the high. I didn't care. It was a big move.
Yeah, no. There's nothing wrong. It's like certain people have told me, because I would lament, I got out long ago, and they go, yeah, you know what? You've built a nice life getting out early.
Yeah, exactly.
Judd, didn't Rothschild say to try and leave some money on the table for the next guy?
Yeah, he said I got very wealthy getting out early. You know what? As again, markets only have one top and one bottom. Pick them. Go ahead, find it. Go ahead, find it. Every market has one high and one low. Find it.
It's a great point.
It's a very good lesson in my life. And I would sit there and lament. I'll never forget when my fourth daughter was born. It was Judd. Remember Volume Investors at the COMEX?
Yeah.
When they ripped up the cards because all the locals were on the wrong side of the trade, silver trade. You remember that?
Oh, yeah.
April, May of 1987, they ripped up the trading cards. The COMEX couldn't open for 3 days because they couldn't resolve the trades.
So what did they do?
Yeah, who eats it in that case?
Everybody else. That was New York.
They got it resolved. Because they had to. Otherwise, it was over. So they did the best that they could. But that was, and I know because I'd been long silver, and silver we had a phenomenal move, and I was on the phone with a very dear friend of mine who's a great trader, and I was lamenting being out of silver, and it was already $1 higher from there. And while I'm on the phone with him, he starts going, "Oh fuck." I go, "What? What are you fucking long up here?" He says, "Oh fuck." Excuse my language. He says, and he goes, "Are you looking at the market?" I said, "No, I'm holding my daughter. She's 3 weeks old." He goes, "You're out of, stop crying about being out of," he said, "Stop crying about, silver now just broke $2.50. He says, "I got to go." That was, I'll never forget that. And then he got out, but they wouldn't tell him his trades for days.
Well, that's what happened to Marty. He had an order in the gold. It went through his order by $20 or $30 each wave for like 4 trading sessions, and they wouldn't give him a fill. They kept telling him he was unable.
Right. That's right.
That's New York.
That's right.
I was just going to say that. If we did that in Chicago, we'd all be
in jail. Oh, yeah, for sure.
Oh, my God, that's so
Trust
funny.
me, they couldn't open for 3 days. And I'm not lying.
Oh, my Lord. No wonder God I'm at a discount.
Thanks,
hey,
Tristan.
we have better bagels here, so cut the shit.
You know what? No wonder those seats were so expensive.
$23,000. Well, at NYMEX anyway, I mean, those were, you remember that Eddie Gas and the oil traders? We were all looking to leave the NASDAQ going to trade oil, and the memberships there were $25,000 a month. And there were a few of us did it.
Yeah, rent. There was a reason for it. And you have to realize that if you weren't in the club, you were a dead man.
Yeah, then if you go there, they wouldn't trade with you.
No, they wouldn't. They trade
for sure not. For sure not. It was like being down in the S&P pit on the bottom. I stood there during 1987. I couldn't make a winning trade in the pit. I did much better putting my orders in by phone. I had no chance because if the trade got down to me, I was dead. I didn't want it.
Well, I did that when I was in the hog pit in I don't remember, the late 2000s after I left the NASDAQ. I would get my orders.
Yeah.
I would always get my orders to the brokers because they would just trade right through me. Those guys they didn't want me. They just traded right through me.
Right through. They were, you know what? I was, they didn't even know I existed. If it made its way down there, I didn't want it.
No, that's right.
Yeah.
That's absolutely right.
I had no chance. So I said, not as, and they wanted you in the pit because if you had capital, they wanted anybody with capital who could trade. But I said, no, that's not happening.
I walked into the T-bills. I didn't want to walk in.
Well, the euro, yeah.
And
they
the
wouldn't
I
let you in
couldn't
there
get
either.
into the Eurodollars. The T-bills were trading 80 points wide between bid and offer.
Yeah, the euro dollars were crazy. The 200-point opening.
All right, guys. Anything else you guys want to talk about? You have any other questions besides what the next two ticks are going to be in the S&Ps?
I was going to ask you. So, do you think we're going to be going from here?
You think what?
I was just kidding. I was just going to say that.
I know. It's okay. You know, listen, Judd, share that article because that's an important article that Pritchard wrote last night. So you can do with it as you want. It's worth reading.
Yeah. I put it in as soon as we started the recording.
Yeah, and you don't hear anybody else talking about it, but that's okay. Let's see if I'm going to be glued to the gold today. I don't care about it. I want to see if the gold can close over.
Well, I want to see what the bonds do after 2:00 because right now they look like they're they're getting hit pretty good, and the dollar keeps going bid with them coming down. So
that's right.
Just turn the gold negative.
Yeah, and again, everybody, the discussion becomes on the long end about a recession. But my attitude is, if you're going into a recession, the long end is not going to rally here. I think people are making a big mistake. And I listened to a guy cite 4 reasons why, and I understand that. But again, part of my analysis when it comes to the bond markets around the world, which I analyze fairly comprehensively, are that debt does matter. Debt matters. And again, with the U.S. running a deficit of $1 trillion with a robust economy, if the economy declines dramatically, that debt load is going to explode. It's going to explode. So I want to keep my duration as short as possible, and as long as it doesn't cost me a lot, it'd be one thing if the 210 was 150 basis points. Okay, at least I'm getting paid for taking on duration. But it's not. The many times we've had this discussion, it's been 15 basis points. 15 basis points for 8 years of duration? No, thank you. See ya.
I just keep thinking about one thing, Ira. I hear Howard Green yelling at me right now. What day is today? It's Wednesday. What was the last extreme in the gold? It was a Wednesday. What's this extreme in the gold? Another Wednesday. That's why I'm always talking about the midweek shuffle. And that's where you look for potential trend changes.
Listen, Howard is a brilliant technician, and he had more ability to crunch data. He was like a human algorithm, just crunching these and knowing the patterns visually in his head. It's a great gift to have, and he was unbelievable with it. Really, truly unbelievable. All right. Enjoy. Thanks for allowing me to spend some time. I always enjoy it because we got to get more questions lined up besides 10 ticks. I'm just not a 10 tick guy.
None of us are. Well, thank you, Ira.
Thanks, Ira.
As always.
Okay. All right.